Welcome back to the channel. Today, we're going to discuss the incredible performance of Bitcoin in the first quarter of 2023. With a 72% gain, Bitcoin's market value has reached a staggering $542 billion. So, let's dive into the factors contributing to this rally and what it means for the future of the cryptocurrency market. In the first quarter of 2023, Bitcoin has outperformed other major players in the market such as Ether, gold, and even the tech-heavy Nasdaq Composite Index. This has positioned Bitcoin as the leading cryptocurrency, solidifying its dominance in the market. One significant factor driving the rally is the speculation surrounding central banks' easing measures. With expectations of the Federal Reserve and other central banks potentially abandoning their aggressive rate increases, Bitcoin has become more sensitive to liquidity swings, making it an attractive investment for many. Bitcoin and other assets like gold are gaining traction due to their sound money appeal. As central banks inject more liquidity into the market, investors are seeking assets that are less susceptible to inflation, offering a potential hedge against currency devaluation. This, in turn, has driven the demand for Bitcoin. Another catalyst for Bitcoin's surge is the expectation of a Fed pivot. After 3 U.S. banks collapsed and the Federal Reserve launched emergency funding programs, the central bank's balance sheet expanded by $300 billion. This move undid months of quantitative tightening and led traders to anticipate an easing cycle starting in June with a rate cut. While it's difficult to predict the future of the cryptocurrency market, Bitcoin's performance in Q1 2023 has certainly made a strong statement. As long as central banks continue to maintain a dovish stance, Bitcoin and other sound money assets could maintain their upward momentum. Bitcoin has had an outstanding first quarter in 2023, marking a 72% gain and bringing its market value to a whopping $542 billion. This performance has solidified Bitcoin's dominance in the crypto market, as it surpasses other major players like Ether, gold, and the tech-driven Nasdaq Composite Index. Comparing Bitcoin to Ether, the second-largest cryptocurrency by market value, we see that Ether has experienced a 50% quarterly gain. While this is undoubtedly impressive, it falls short of Bitcoin's 72% gain, highlighting the renewed interest and confidence in the leading cryptocurrency. Gold, often considered a traditional safe haven asset, has seen a 7% increase in value during the same period. However, Bitcoin's superior performance demonstrates that more investors are turning to digital assets as an alternative store of value and a hedge against economic uncertainty. Lastly, let's take a look at the Nasdaq Composite Index, which has rallied 15% in Q1 2023. While this indicates a strong performance for the technology sector, Bitcoin's 72% gain showcases its status as a high-growth, high-risk asset that can potentially yield substantial returns for investors willing to navigate its volatility. So, what's behind Bitcoin's impressive Q1 performance? Factors such as speculation on central banks' easing measures, sound money appeal, and Fed pivot expectations have all played a role in fueling the rally. These factors, combined with the growing mainstream acceptance and adoption of digital assets, have further propelled Bitcoin to the forefront of the market. The expansion of the Federal Reserve's balance sheet came in response to the collapse of 3 U.S. banks, prompting the central bank to launch emergency funding programs to stabilize the banking sector. This intervention was aimed at preventing a broader financial crisis and maintaining the stability of the U.S. financial system. While this move provided much-needed liquidity to the banking sector, it also reversed the Federal Reserve's previous efforts to tighten monetary policy. Quantitative tightening, which involves reducing the central bank's holdings of treasury bonds and mortgage-backed securities, is designed to decrease the money supply and curb inflationary pressures. However, the sudden expansion of the balance sheet has led to a shift in expectations. Market participants are now anticipating an easing cycle, with the Federal Reserve potentially cutting interest rates in the coming months. This expectation has had a profound impact on various financial markets, including stocks, bonds, and cryptocurrencies like Bitcoin. The expansion of the Federal Reserve's balance sheet and the anticipated easing cycle could have broader implications for the global economy. Central banks around the world may follow suit, adopting more accommodative monetary policies to support their economies. The resulting influx of liquidity could boost global growth in the short term. However, it may also raise concerns about increased inflationary pressures and the potential for asset bubbles. Investors should monitor these developments closely, as they could influence international trade, foreign exchange rates, and investment strategies. As the financial landscape shifts due to the Federal Reserve's actions, it becomes increasingly important for investors to adapt their portfolios and risk management strategies. The expectation of an easing cycle might prompt investors to reevaluate their holdings, adjusting their allocations to stocks, bonds, commodities, and cryptocurrencies. Diversifying across different asset classes and geographic regions can help mitigate risks and capitalize on emerging opportunities. Additionally, investors should consider reassessing their risk tolerance and investment horizons, ensuring their strategies align with their financial goals and changing market conditions.